Hi, this is Kribakaran Rajendran, founder of Algo Trading from SquareOff.in. In this video, we'll be talking about 3 secrets of trend following systems. If you observe closely, trend following systems works greatly when things happen that we don't expect. For an example, the 2020 Corona crash, which nobody expected. No, market fell down sharply and again it recovered quickly. If you go back and check what kind of system really did well during those periods, obviously trend following systems would have able to capture the down movement as well as it was able to capture the up movement that happened eventually during the recovery period. Again, the same thing with respect to 2008 global financial crisis and with again dot-com bubble burst. So all these periods, all these adverse periods, if you observe closely, trend following systems really worked very well during those periods. It was able to capture the downside movement as well as it was able to capture the upside movement. So trend following system makes outsized returns during these crisis periods, and rest of the time they'll be in drawdowns or stay flats or make a smaller amount of returns. We can't expect a trend following system to make consistent returns every month, a month after month. Making returns using trend following system is not at all possible. So most of the times trend following relies on few trades which can give outsized returns than all those other trades which gives a lesser returns or smaller losses. So basic gist of trend following system is nothing but you continue to face smaller losses in order to get that one big trend or in order to get that one big profits that eventually occurs. Jesse Livermore, one of the famous stock trader who made huge fortune worth $100 million at his peak during 1929. So that $100 million is worth around $1.5 billion in today's money. So he was able to make that kind of money through his trend following principles during the 1929 period. And if you observe closely, 1929 was the Great Depression period, which witnessed one of the worst crash in stock market history. And there is this other trader, Richard Dennis, who's famously called as Turtle Trader. He turned a simple $400 trading account into a $200 million account in 10 years of period, again through his own trend following principle. So what's common among all these traders who made millions are they are simple trend followers. They trade based on simple trend following logic. So there are hundreds of research papers published based on hundreds and 200 years of historical data, which states that trend following works well for many decades because all such big movements are primarily caused by human emotions, which is greed and fear. So the technology may evolve, there could be multiple things, market dynamics could change over the period, but one thing that doesn't change at all is human emotions, who make their trading decisions primarily driven by greed and fear, which will never change. If all these people could make millions of dollars, why can't it can be replicated by other traders? Why trend following is really hard when compared to any other trading systems? Because trend following mainly works against human nature. So the main gist of trend following system is buy high and sell higher. It is not like just buy low and sell high. It is completely opposite of that. You have to buy at a high price in the anticipation of selling it later at an even higher price. Let's say that you wanted to buy a laptop and you look for all these laptop prices in Amazon. You could see that it is available between 40,000 30,000 to 40,000 prices, and you wanted to shortlist one of the laptop which is priced at 40,000 and you wanted to buy it, but you think that okay, instead of buying it right away, let me wait for a few days so that if the price goes down I'll buy it. Next day you go and check it Amazon, instead of 40,000 or 42,000 it trades at around 45,000 or higher than 45,000. So what would you think? So you will think that okay, obviously it is priced higher now, let me wait for a few more days so that let the price go below 40,000, then I'll buy it, because you have already seen the laptop yesterday priced at 40, now it is increased to 45k. So as long as it goes below 40k you will not buy it, because you already seen that it is priced at the lower price, now it is increased. So the moment it goes below this price you will buy it. That is the human nature, because we do not wanted to shell out more money. We always look for a bargain opportunity where we wanted to send out a very lesser amount in order to get whatever we wanted to buy. Now let's compare it with a stock called BSE stock. So BSE stock which moved from 500 levels to 1000 levels in few months. So every indicator would show that the stock was in overbought zone during those periods. So because the stock already rallied 100%, so we will think that how far it can go further, because the stock is already appreciated more. So it's better not to buy this stock Instead, let me buy it if the stock corrects a little bit down, or instead let me buy some other stock which is beaten down to a greater extent, because the chance of making money is much higher there than this stock which has already risen up so fast, right? But let's look what really happened. The same BSE stock which was shown as overbought zone near the 1000 levels rallied almost 200% further and moved from 1000 levels to 3000 levels now. Just because a stock moved up a lot doesn't mean that it can't go higher anymore. Trend following is all about being comfortable with buying at a high price with the expectation of selling at even more a higher price. So the same is applicable for downside as well. Consider this Paytm stock. After listing, it kept on going down. So when it reached around 1300 levels, many indicators suggested that it is in a oversold region and it is better to buy at this region. Many technical indicators would have suggested that. Even psychologically, many IPO investors who bought stock around 2000 levels would be thinking that okay, the price that currently trades at around 1300 levels, which seems attractive, so let me go ahead and buy it so that I could bring down my average price. So that is what most of these IPO investors would have also thought. But if you observe again, the same thing happened with Paytm. So after where it was marked as oversold region, the stock even went down further. It has crashed more than 50% from the oversold region and it is currently trading around 600 levels. So the stock continues to go down further and further. So there is, in stock market, there is nothing as a stock which is at a high price or which is at low price. There is no such levels as no price is too high to go long and no price is too low to go short. If a stock is trading at a overbought region, it can be continue to be in overbought region for a prolonged period of time. Similarly, if a stock is in oversold region, it necessarily doesn't mean that it has to bounce back. It can continue to be in oversold region for a prolonged period of time. One thing that many traders or system traders or beginners who fail to notice is trading outcome is completely random in nature. You can never predict whether the trade that you have taken is going to be a profitable trade or a losing trade until you close it. And especially with respect to trend following system, you have to be very comfortable in taking multiple small losses in order to make those little large gains over a long period of time. But the outcome is going to be same. So let me explain with respect to an example where you consider you have taken a trade. You have taken 10 set of trades. So let us consider with respect to trend following strategy, most of the time your winning accuracy is going to be less than 40%. No matter whoever claims that they have a winning higher accuracy of 70% or 80%, that cannot be possible with trend following system. Trend following system, the average winning accuracy varies anywhere between 35 to 45%. So only people who use a fixed target, then they can claim that they are having a higher winning accuracy. But using a fixed target with trend following is going to be disastrous. So never use a fixed target with trend following systems. So any trend following system is going to have a less than 50% accuracy. However, they are able to make money on the long run because their risk reward ratio is going to be minimum 1:2. So let us consider that you have taken 10 different trades and the outcome of each and every trade is completely random, but let us consider these are the outcomes. So the first trade you have taken, it ended up in loss. Second trade you have taken, it again ended up in loss. Third and fourth trade also ended up in loss. Fifth trade you were able to make profits. Sixth trade, it ended up in loss. And again 7th, 8th, 9th and 10th trade, it ended up in profits. So this is the outcome of 10 trades that you have taken using your trend following system, which has a less than 50% winning accuracy with 1:2 risk reward ratio. So when I say 1:2 risk reward ratio, it means that when you're making a loss, say you are losing 10 rupees, and when you're making a profit, you are making 20 rupees. So that is what you call it as a risk reward ratio of 1:2. So based on this outcome, if you look in general, it means that 5 trades are losing trades, 5 trades are winning trades. So with respect to 1:2 risk reward ratio, you are going to be obviously in profits, right? But consider a guy who is having 1 lakh capital and he wanted to risk 25,000 in each trade. So what would happen is, first trade you would have lost 25,000. Again second trade you would have lost 25,000 more, and by the time third and fourth trade you would have already wiped out his all capital, because with 1 lakh he is risking 25,000 in each trade. By the end of fourth trade he is almost losing all his capital. So whereas consider the other guy who is risking only 1% in each trade. So the first trade you would have lost 1%. Again by the end of fourth trade you would have lost only 4%. Again fifth trade you would have won, and where you would have made 2%. because when he is winning, he is winning 2%. When he is losing only 1%. So in this case, after 10 trades, the outcome of the second guy would be in profits of 5%, whereas the outcome of the first guy who risked higher has ended up wiping out all his capital. So with respect to trend following systems or anything which follows and trend following patterns, the trading outcome is same. So in this example, the trading outcome is same, the rules are same, but still two different overall results. One guy have blown up the account, the other guy made a 5% positive returns. Just having a trading strategy is not enough. We need to apply a proper risk management to withstand these series of losses. So that is where most of the beginners make mistakes. They think that they have a profitable system. In fact, most of the people have a profitable system, but they apply a improper risk management or follow a improper money management rules. So make sure that you calculate what is your winning accuracy of a system and accordingly plan your risk per trade. Otherwise, you could end up blowing up your account within short span of time before the strategy starts giving you any profits. If you're a trend follower, or if you're already using a trend following strategy, if you observe your trading channel, if you go back and check, you will find that 80% of your overall profits has come from less than 20% of the trades. That is a very true fact which many people fail to notice. Many pro traders suggest not to use fixed targets because when it comes to trend following systems, few large gains is very essential to make up for the many small losses we face down the line. So with respect to trend following system or with respect to breakout systems, your maximum profits will come from very few minimum number of trades. So that is why it is very, very essential to take each and every trade that is triggered from your trend following system. And this 80-20 ratio is not only applicable for trading, it is applicable for even for investing as well. Let's take the most successful Indian investor, who is Rakesh Jhunjhunwala. If you go and check his portfolio, even though he holds many stocks, Titan and Escorts contributes 80% of the wealth that he has generated so far. So even though there are multiple stakes that he holds on multiple different companies, the large shareholdings or the large wealth was generated only from these few or two or three set of stocks which he was having higher holdings. So even if we check the Nifty 50 stocks or the Nifty 50 index, these 10 stocks decides the movement of Nifty. Even though we have 50 stocks in Nifty 50, only these 10 stocks going to decide whether the Nifty has to go up or go down. The rest of the 40 stocks doesn't play any vital role. So only these 20% of the entire Nifty 50 decides where Nifty should move. So the 80% of the Indian stock market is decided by these 10 stocks that you see, which is decided based on the weightage of each and every stock. This is what you call it as Pareto principle. So this Pareto principle is specifically applicable for these investings or tradings or be it index. So any kind of systems, your 80% of your overall returns is going to rely on this 20% of little trades or little investments that you make. So we have seen the Pareto principle applicable in trend following systems. We have seen it in Rakesh Jhunjhunwala's portfolio. We have seen it in Nifty 50. And it is even applicable for individual companies' performance as well. Consider a company like ITC. Where does the major revenue come from? It is obviously in their cigarettes. So if you check each and every category, 80% of their revenue comes from less than 20% of their overall business. So majority contribution is from the cigarettes industry. So let me explain with real-time examples. So the chart that you see is the performance of golden ratio strategy, which is applicable on Bank Nifty futures. So it has made almost 130 plus returns in the last 1.5 years. And even though this is the overall returns that it has made, it has given a very good smooth equity curve. If we dig deep and check what is the each and every trade outcome and how it has impacted the overall returns, you would see a complete different picture. The Bank Nifty golden ratio strategy has been tested for more than 10 years of data, and the chart that you see is nothing but the actual Bank Nifty points that was made by this strategy over the last 10 years period. So over this 2000 trades, if you see on the downside, the stop loss varied anywhere between minus 100 points to 200 points. But on the upside, if you could see, sometimes it made 300 points, sometimes it made 500 points, and sometimes even it made 1800, 2000 points in one single trade. So these were outsized returns that happened once in a while. So as you could see, those 500 points of profits or 600,000 points of profits that you see, or those few spikes which happens once in a while. It was not a regular thing. But on the downside, if you could see, the risk was completely contained between minus 100 to minus 200 points. So that is why we don't use any fixed targets with these kind of breakout systems or trend following systems, because when you use a breakout when you apply a targets with these kind of systems, you are going to lose those huge profits, but only those huge profits is going to give you overall bigger returns at the end of a large number of trades. So it is very very essential not to use any fixed targets with respect to trend following system. Let me show you the live results of the strategy after we deployed it in bot. So as you could see, in the April month, May month, during the 2020 corona crash period, it almost made 1.5 lakhs in the first month. Second month almost it made 1.3 lakhs. So these huge profits happened with just one lot. But again in June it was a loss, and again July it was a profits. September, October, again it made 30,000 and 50,000 per lot. But again in January and February in the next years, it made around 50,000 and again 30,000 profits. But after 2021 it made around 10,000, 16,000 loss, 10,000 profits, 18,000 profits. So if you observe closely, the distribution of P&L is like the larger profits has come from few months when there was extreme movements in the market. So that is how trend following works. So you tend to make a fewer returns or fewer losses at some times, but you get outsized returns in few months, which is going to decide your overall P&L. So that is why trend following systems, it is really hard for many traders, because you can't expect these kind of outsized returns month after month. It might happen 2 months down the line, it might happen 6 months down the line, we never know. But when that happens, it not only compensates all your previous losses, it also ends up giving you a huge high returns, making all-time high with respect to your equity curve. So with respect to this trend following or breakout system, I just noted down, like I've taken all those 2000 trades which is triggered by the system, and I have sorted it from high to low, like whatever the trades which has given highest profits, it has sorted it based on the highest profits. So from there, if I've taken 20% of the trades, like if you've taken the top 10 or 20 trades, and if I remove the profits that has come from these high profitable trades, so just remove the high profitable trades from your overall backtest reports and see what is the overall returns looks like. So if I do that, then I end up getting like overall my returns looks like 40,000 points of overall profits in the last 10 years. But if I remove this top 10 trades or top 20 trades, then my overall P&L becomes negative. So that is the true fact with respect to any breakout system or any trend following system. No matter how hard you try, if you are going to remove this top few percentage of returns or top few trades which has given you outsized returns, you are going to end up in a negative system or going to end up with negative returns. So if you are a trend follower system, or if you're following a trend following system or a breakout system, make sure that you take each and every trade without missing any of the trades, because we never know which is going to be that one big profitable day. So just ensure that you're taking each and every trades. So because as I said earlier, just 80% of your overall profits will come from less than 20% of your trades. If we remove those 20% of the trades, we will be ending up with a negative returns. So make sure that you take each and every trade from your trend following system. So this is what I wanted to convey with this video. So if you guys have any specific questions or comments, you can post it in the comments window. I'll try to address it. Thank you.